Welcome back to the deep dive. Today we're plunging into something that, well, for a long time felt pretty locked down. Angel investing.
Yeah, definitely had that exclusive vibe.
Right. Like when you hear angel investor, you probably picture someone, super wealthy, writing these massive six-figure checks for tech startups. That whole idea.
The classic image. And needing to be an accredited investor, that was the big hurdle.
Exactly. Needing, what, $1 million net worth or making over $200K a year. It felt like that was the only way in.
That barrier was certainly real. Getting actual equity, like real ownership in these early private companies, yeah, historically, that was off the table for most people.
Literally, reserved for the sort of financial elite. But the stuff we've been looking at today, our source material, it makes a really strong case that, well, that picture isn't quite right anymore. Things have shifted.
They really have. The source highlights, changes in regulations, things like the JOBS Act here in the U.S. and that, combined with new tech platforms, well, it's opened things up.
And that's really our mission for this deep dive.
Yeah.
We want to unpack how you listening right now, could potentially become an angel investor, and maybe starting with an amount that's surprisingly small.
Like potentially just $100, which sounds kind of crazy compared to the old way.
Exactly. We've sifted through the material to pull out the key bits on how this transformation actually works.
And what's really interesting is the rise of these equity crowdfunding platforms. The source specifically mentions sites like Republic, StartEngine, WeFunder, those kinds of places.
Right. So these platforms basically let companies raise money online, but from a whole crowd of smaller investors.
Precisely. So instead of needing that one big check for, say, $100,000.
A startup could get the same amount from, 1,000 people putting in $100 each?
Exactly. And the crucial point the source makes is this isn't just lending money. You're buying shares, actual ownership equity in that company.
Okay, so that's the game changer. Real ownership. For maybe just $100.
Yeah.
You're not just stuck with the public stock market anymore.
Right. You can get in before a company goes public, potentially when it's still tiny, maybe just starting out.
And that accessibility, it opens up the potential for those really big returns, right? The source talks about that.
It does. I mean, it's definitely rare, let's be clear. But if you back a company that really takes off, think early DoorDash or something, that small investment could, theoretically, become much, much larger, like a 10x, 50x, maybe even 100x return down the line.
If it succeeds and if there's an exit, yeah.
Big ifs. And we absolutely have to balance that potential with the risk. The source is very clear on this. Startup investing is highly speculative.
Yeah, it sounds like you really need to know what you're doing, or at least be prepared for losses.
Absolutely. Most startups fail. That's just the reality.
Yeah.
So the source stresses this isn't money you can't afford to lose. And diversifying, spreading small amounts across several companies is really key advice.
Right, so it's not painting this rosy get-rich-quick picture. The risks are front and center. But what I found interesting is that the source also emphasizes value beyond just the financial side. It talks about developing a certain mindset.
Yes. That's maybe the biggest takeaway, beyond just the low entry point. The source argues that just engaging with this kind of investing, even on a small scale, forces you to think differently. You shift from just being a consumer
To thinking like an owner.
Exactly, like an owner or an investor. You start analyzing businesses you encounter in a new way.
So instead of just buying coffee, you're thinking, how does this shop make money? Who runs it? What's their edge? That kind of thing.
Precisely. You start asking those questions. What's the business model? Who's the team? What problem are they solving? Could I see value in owning a piece of this? And that analytical muscle, the source suggests, that ability to evaluate businesses is incredibly valuable in itself.
Even if the specific investments don't, explode financially.
Right, because that skill set, analyzing companies, spotting trends, understanding markets, assessing teams, it's useful everywhere. In your career, other financial decisions, just understanding the world better, it's transferable.
Okay, so what does this mean practically for, someone listening? What's the takeaway?
Well, the challenge the source kind of lays out is pretty straightforward. Go explore. Check out those platforms mentioned: Republic, StartEngine, WeFunder. Just browse the companies raising funds.
Maybe start with areas you actually understand or care about, like a hobby or your industry.
Good idea. Look at their pitch decks, try to understand their business, who's running the show, and then maybe, just maybe,
take the plunge with a small amount.
Yeah, consider making a small, diversified investment something you're genuinely okay with losing entirely. Because, as the source wisely points out, learning happens by doing. That first step is key.
So it's less about hitting a home run straight away with $100 and more about getting access, building those evaluation skills.
And starting to see the world not just as a customer, but yeah, as a potential owner.
Interesting. A different way to look at things.
It really is. Ultimately, this whole shift, this democratization, it gives you a chance to be part of the story of businesses you believe in. And crucially, you develop those analytical skills that can serve you for life. So yeah, go check out those platforms, Republic, StartEngine, WeFunder, and just start training your eye. See what opportunities you spot.